Everyone, hope everything is going well. Hope your holiday season is amazing. I wanted to touch base on a few things, okay? Santa is coming. However, there are going to be some issues underneath the surface, in my opinion. I'm not telling you how to invest, how to speculate. I'm just telling you what I think as of this moment, okay? Government shutdown crisis averted after Biden signed stopgap funding bill. Okay. There was a threat of a government shutdown. The Republicans and Democrats came towards a short term solution up until March. And the markets, it seemed, were pricing some sort of resolution. And then not only that, the PCE numbers, they were lower than expected because you saw from what happened earlier this week, we saw the markets tank because you had Powell. He said, number one, we're going to cut rates, but not to the extent that others are expecting because of inflation. That's what basically happened. Markets did not like that whatsoever. They went down. I think the low on the S&P was like what? It must have been lower than that, but 58, 586.28. This is the SPY ETF, okay? And then we saw the markets rip yesterday. Now, towards the high, SPY was about 595.6. That's when I was like, hey, let me put on some 30-cent put options. Literally, I did that. I didn't put that much money in it, but it did pay off a little bit. Those 30-cent options, 11-cent options in a volatile day, some people make a killing on that on the buy side. On the sell side, oh man, I feel for those guys that do that, but that's why I never sell options anymore, just only on the buy side. And when I also saw this, I noticed a few different things. Look at the US dollar index, the Dixie. So when the PCE numbers came, what ended up happening was the dollar started to go down. And bada bing, bada boom, you saw markets rallied. Euro rallied, the yen rallied as well. You know, in a forex position, I do have a yen position on. Now, could I be a little early on that? Sure. I mean, I saw the Bank of Japan, you know, kept their rates constant, but still the yen sold off. And then I'm like, crap, it was an explosive move. So, you know, battling through that position, but I do expect the dollar index in the short term to go lower. Could I be wrong? Sure, but let me look at the daily sentiment index. This is done by Jack Bernstein. But anyways, I found this tweet very interesting. Sabu Trade has this based on Jack Bernstein. So take a look. US dollar index and the dollar daily sentiment index, looking at basically dollar futures and the sentiment of the players in the industry. They have noted, Jack Bernstein's firm, the dollar sentiment index is 89. Okay. 89. And it's going down from here. Yikes. Yikes. So when you see an excessive move, what usually ends up happening is the trend tends to reverse. Let's look at some more data. I follow him on my other account, but let's take a look at this. I know he had some chart. Maybe he deleted it, but it was about the daily sentiment index. It may have been about the TLT, which he has above. Let's take a look. So he says 10-year treasury yield after daily sentiment index falls to 10. Sometimes it rallies, like usually a month returns, you see a rally, not all the time. 2022, you saw the TLT rally. So that's something to note. And also, when you see all these lower or extreme indicators, you tend to see a reversal. And I do expect some sort of reversal. It's just now how much it's going to reverse from a trend perspective. Okay. So when you're seeing, bonds potentially rally, the dollar going lower, that could add liquidity to the markets. And going back to the S&P 500, short-term trading wise, yeah, that should help equities and trading. So I had to remove this week some put options that I had in my portfolio. I still have some, but I will be adding more as the market, I believe, will continue to rip. But here's where things get a little messy. Okay. Reverse repos, it's at $98 billion. This is below 100 billion. Fast forward, I mean, look in the past, December of 2022, this liquidity was 2.5 trillion and it has gone into equities, into the economy, into crypto. That's why I believe crypto is on its last legs for this bull market. The stock market is. And once this liquidity dries out, where is the liquidity going to come from? Okay. You can look at M2 money supply. I've showed this over and over again. And last 2 years, let's look at 5 years. This has stayed constant while the markets have ripped. Okay. We're going to get the October numbers soon. I mean, November numbers, but look, this is not how markets go up. If you see money supply dwindling, and then not only that, reverse repos that provided the liquidity into the system, because that's part of net liquidity for the Federal Reserve, where is the money going to come from? How are you going to get money flowing through? Some people would argue that deficit spending has pumped up the economy over the last 2 years. Let's just look at that. Or let's look at it last 5 years. 5 years, okay? Okay. Let's look at this. The deficit in 2020 was $3.1 trillion. Okay. I'm not a fan of deficit spending, but look at M2 money supply, the printing of money, the PPP loans, the liquidity, and all that. Let's look at 5 years, right? You see this deficit spending and then also all that stimulus in the economy. Boom, stock market roared, right? The deficit in 2023 was 1.7 trillion, okay? So you started to see the markets go up, okay? Despite the huge deficit, money supply didn't really go up that much. And 2024, the deficit was 1.8 trillion dollars. Now we have a Republican Congress, and I'm not playing politics here. I'm just looking at it from an unbiased point of view. Republican president. Some people say that Trump really isn't a true Republican, whatever, right? I think they're going to be like, look, we've had a $1.8 trillion deficit in 2024. We don't want that. So let's look at the deficit projection for 2025. Okay, so they projected a deficit of 1.9 trillion. Are we going to get there? What's going to happen in March with the debt ceiling showdown? So I think what's going to end up happening is they're going to have a deficit probably around this range, maybe like 1.8 trillion. But the thing is, government spending, will it increase just like we saw the last few years? No, I don't think it will. And I think part of that deficit is going to stem from the tough economy that we're going to be facing. And when you have that, and when you have reverse repos going to zero, liquidity is going to be dry. We're going to have a lot of problems, in my opinion. I hope I'm wrong, but after this weak dollar rally goes away, what the markets will look at is too much of a higher dollar is going to hurt the markets, in my opinion. But we shall see how it goes. Doesn't change my opinion for me buying long-term put options with my profits. You know, that's where I'm headed because a lot of problems underneath the surface, even though we'll see Santa probably in the next week. Anyways, let me know your thoughts. Talk to you later. Bye.